critical in the next few days.
Now, do you think that the millionaire tax, the Buffett rule, will play a very big role in this compromise? You know, Obama administration wants 30%, at least tax for the millionaires. You know, we're talking about $1 million and up. So if they have to come to a compromise in the fiscal cliffs issue, do you think that the millionaire tax issue is going to become a very critical one in, trading this whole issue?
Well, I think so, because there's really, as Cecil said, there's really two main income limits that people keep talking about. It's the 250 income limit and the million. So that's going to be the next benchmark. If the Republicans say that we need tax breaks for people making over 250, then the next zone is going to be the million. Right. So it very well could be that that's where the compromise is settled.
So you think the 2K and the millionaire taxes are going to play, they're going to be pretty much where the trading is going to come in the picture?
Absolutely.
If you want that,
yes.
The middle class and the low income group not being hit by this, so let's work on the millionaire tax.
Right. Warren Buffett's whole issue is that his secretary pays 30% tax, whereas he's paying 15% because he's in the capital gains and the dividend preferential rate treatment, that he feels that everyone else should step up to the plate and pay a minimum of 30% tax, and that's the whole ideological thinking here. So the question is, yes, you do raise money, but the Republicans counter with saying that they are job creators, and then that will put a dampener on this. And I think that the passive investment, what we call passive investment or passive income, is capital gains and dividend income and all these other categories of non-earned income. Right. That is always up for grabs, and there's a big battle between how much to charge that versus the earned income. They always think that to be discretionary income, additional income. So, and the recent election would tell Romney similar situation. The effective rate was only 14%. Right. So there is some debate going on there. We don't know whether, but my gut tells me, and these are all proposals, Renee, we want to re-emphasize, you want to consult your local attorney or tax professional before you file. But we feel that that is the battleground, the lines have not been drawn in the sand. So there'll be some movement. I feel that 250 may go to 500. I don't know. But right now, it's just a question of debate on both sides, posturing to make sure how much can you extract out of each other.
And how much compromise
you can really
move
at this point of time. Absolutely right.
Now, we talked about Obama Healthcare, Affordable Healthcare Act, which is going to kick in completely in 2014. And how does it impact taxpayers?
Sure. So in 2013, there's a new layer of taxes that are coming in that are really designed to help pay for some of the healthcare pieces of the legislation that become effective later. So there's really two main taxes. There's for people who are earning wages, there's a 0.9% tax that gets added on the Medicare tax. Right. And for people who have passive types of income, interest, dividends, capital gains, rental income, they have a 3.8% additional tax. Now, the key to those two taxes is they apply to people who are generally making more than $200,000 or $250,000. Right. So if you're making less than that, those tax increases don't apply to you. Okay. But if you're making more than that, then that is very significant. If you are making most of your money from dividends, they were paying 15%. Not only is that, and you're in the top bracket, not only is that 15% gone to 39.6, but now you have this 3.8% tax. So you've gone from 15% to 44% approximately. So those are some of the people who are seeing the most dramatic increases in their tax rate. So that's all effective January 1st, 2013. That's new law that was passed in 2010 as part of the healthcare overhaul. So I think it's very unlikely that that's going to be changed in part of these discussions.
Okay.
I'll add one more to that, Renee. I think the employers also, it's in 2013, most people will start putting it on their W-2s. The employers have to put in on their W-2 as to how much is their contribution to cover that employee. Okay. So they want to make sure all the employees are covered. And there'll be penalties kicking in 2014, either the employer or the employee for not carrying insurance. So this is 13 is a staging area. Right. The actual execution is 14. But everyone is gearing up, including small business, want to understand the impact, and Vinay has commented on this before. We are looking at what is the impact to the employer and to the employee.
Okay, now let's say you're a freelancer, you're 1099. How does the the healthcare reform, the Affordable Health Care Act, work out for that person?
So what happens is that you're not subject to the main rules. The main rules apply to employers who pay have more than 50 employees.
Yes.
Okay?
Right.
So in some senses, that freelancer is kind of grandfathered or not part of these new laws. And so hopefully those people are going to see some of the benefits, because we hope to have lower healthcare premiums offered through these new state exchanges.
Right.
It's too early to see how all that is going to actually play out. I mean, that's actually, a lot of the progress on this had kind of been put on hold until people saw what the election is, because if Romney had won, there was a speculation that that whole healthcare overhaul would have been scrapped. Right. But that didn't happen. So now people are taking a fresh look to see how are these things really going to be implemented and enacted? And now we're in the middle of those calculations right now.
So that Medicare contribution, that everybody has to pay for.
Again, if you're making more than
$250,000.
For those under 250, it remains the same.
It remains the same.
Doesn't apply.
Correct.
It doesn't apply for those.
These are the new taxes apply.
New taxes.
But I'd add one more thing, Renee. The whole focus of was an individual mandate. There was challenged that every individual will have to carry insurance either through an employer or on their own. They'll have to buy insurance through the exchanges.
Right.
But without that, they'll be penalized.
Right.
It's just like car insurance. You drive a car, you carry insurance. Healthcare similar. It'll be mandatory that you carry health
So
insurance.
2013 is when you start planning that.
Start planning
and
it.
2014, everything goes into fruition.
14 is the penalty. So
14 is the penalty
if you're in 2014 and either you're not covered by an employer or a freelancer or anyone does not have insurance and does not buy insurance, then the penalty kicks in. But the penalties are really small. Let me just start out by saying
How much is the penalty?
$100 to $200. It's really a small
For the
token.
year or for a month?
It's in that range. I don't know how they're computing, and like Vinay says, a lot of transition stuff happening. The first few years, they wanted to just cut you a break. They don't want to just slam you with those heavy-duty penalties.
I see.
But it'll go incrementally higher.
Insourcing versus outsourcing. Obama administration has already said that they're going to give incentives to those who are not outsourcing, so it's 20% tax benefit.
Yeah, today, Renee, it's a major change because I think the unemployment rate is still high in this country. And as part of solving that unemployment problem, they want to incentivize companies that bring jobs back 20% of the eligible expenses. So if you are outsourcing a job to another country and you happen to say, okay, we'll bring all these jobs back, then the cost of that relocation cost of bringing all those jobs back, of hiring these people and getting them back, 20% of that is a tax credit, which is a big deduction. So I think they're going to they have to lower the unemployment rate, and that is one of the incentives that are seriously being considered in Congress. And my gut tells me, I think that might actually work.
So they have to revamp the whole tax code in this. There's a lot of issues that we're talking about over here, for next year.
Absolutely.
They're always tinkering with the tax code.
That's right. And very quickly, let's talk about the international tax issues. We've said it repeatedly that we're now globally paying our taxes, and so we have to look at the whole picture globally. So FR, and we're talking about, offshore, tax compliance.
Yes, and two comments there, Renee. I think individuals and corporations, anytime you're doing business, we've got to consider worldwide income and then accordingly plan, don't just focus on the U.S. side. In past years, we just focused on the U.S. side, but my rule of thumb now going forward, focus on your global position, global assets all over the world, the income, and then file accordingly. You might get credits for the taxes you paid in the home countries.
Right, so you don't have to pay taxes twice, but you
twice,
still have to
but you still
report.
Yeah, and
That's
the second
important.
comment I make is it's never too late to comply. So if you're delinquent any year and you haven't filed, it's better that you come forward rather than they send you a notice, because once they send you a notice, then all bets are off. The voluntary compliance does not apply.
Right. So this is what we have, the picture for 2013, fiscal cliff looming right in front of our face, and how we're going to work out through this partisan politics, and will there be a compromise in Congress, and we'll see the tax code changing, and how it's going to impact us from 2013 onwards. We'll soon know in just about a few weeks. Well, thank you very much, gentlemen. It's Cecil Nazareth, Chartered Accountant, as well as Vinay Navani, CPA, the tax firm of Wilkin and Guttenplan. Thank you so much for
Thank you, Renee.
looking into the future and looking at the taxes. And I'm Renee Lobo. Thank you so much for watching the Renee Lobo Report.
Welcome to